Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We do have a bunch of earnings stocks. We're at just about the end of the season, but we have about a half dozen or so, maybe more earnings stocks worth discussing. So we'll talk about that. We'll talk about steel stocks moving this morning on the potential tariffs that well, it seems like they'll likely go through with regards to Europe and Canada and Mexico. We want to talk about, I know Dennis wants to talk about the Chinese streaming stocks that have been on fire like IQ. So we'll talk about that as well. As always, we'll take your questions from our chats at premarket.benzinga.com and youtube.com/BenzingaTV. Guest today, 8:15, we'll be joined by Marc Chaikin from Chaikin Analytics. Joel, what is happening this morning in the S&P futures?
In the green by $1.25, 27.28 and a quarter is your pre-market high. That's just a buck above or a buck below yesterday's high. So big area there. On the downside, we got down to 27.18. So pre-market low. We'll keep an eye on that as well. Crude, big day yesterday, giving back 59 cents here at 67.62. Trading just off the low of the day at 67.53. Gold in the green by 220 at 1308.70. Silver in the green as well by 4 pennies. It's 1658. And Bitcoin holding above 7,000, up $217.50. It's 75.65. Bring Dennis in here, and boy, we still got some earnings. We still got some news here. And
oh man, I've been head on a swivel here all night and all morning. There is a lot of news to digest. Individual stock news, earning news. We got potential tariffs coming here. I mean, where do you want to go, Spencer? There's all kinds of stuff going on.
I guess we should start with the tariffs, probably.
Let's do it. What's the news here? And steel is hot.
Yeah, the news is that Trump seems likely to announce tariffs on steel tariffs, specifically in the EU, Canada, and Mexico, and that seems based on several reports this morning. I've seen CNBC. I think I've seen Dow Jones also that seems likely to happen later this morning or by tomorrow at the latest.
So looking here, all your steel stocks on this headline last night, which came out just before 5 o'clock, all your steel stocks really popping up here big time on this headline. Let's look ex-US steel up 5% on this headline, trading out 38.15. What a pop here. AKS also trading up substantially. NUE, STLD, Steel Dynamics. We got Alcoa popping up over $1 here this morning on it. So significant pops for most of these steel companies there on the potential tariffs. We've seen this story before. We saw it with China, obviously, before, and the steel stocks really got a lift on it. Those gains did not hold last time, though. I think it might have had a 2-day rally, but eventually they started to crater and started to go down after the news here. Do you think this is going to be a repeat here, Joel, or is this something that you're buying into?
On again, off again, tariffs. I tell you,
I know. Come on,
I'm so confused. I don't know.
Me too.
I would just, I mean, would I go long off this news? No. If I was long, would I use this as an opportunity to perhaps lighten up? Yes. Shorting it, I mean, yeah, you can see what happens. I'm just going to give one level in each stock resistance since we're going up. For X, we got a seller here at 38.39, 38.40. That's your pre-market high, but 38 looks like the real significant level there. So as long as it holds 38, it looks good to go north. AKS, your smaller price stock, not up as much, trying to get through 480. Boy, a bunch of highs in that at 490, and I'm sure there's a ton of size at $5. NUE was the other one that you mentioned. That one, $66, right where it's traded now, has a series of 5 highs. Steel Dynamics, not much trading in that today, but this is the one that I guess if you're going to own one, it's Steel Dynamics.
Why?
Because it's trading at an all-time high compared to all the other ones.
Well, it's not an all-time high.
Are you
It's
sure?
52. Well, it's 52 a couple of days ago. STLD we're talking about.
Oh, okay. All right. It's not. You're right. I meant relatively speaking, it's trading at
Relatively speaking, this has been an outperformer. I agree, because really, when you look at U.S. Steel, look at it from the last year and a half. So it's a good point you're making there. We're at the same price we were back in 2017, where if you look at U.S. Steel, at the beginning of 2017, it was 35, it's 49. So it definitely has outperformed. I mean, Nucor has really gone nowhere. Nucor is the one I own in my investment portfolio. I like getting paid the dividend. I feel like it's the more stable one. It's the lower beta one. It's kind of the safer play if you don't like the volatility there, but it's not going to move up as much, but it's not going to move down as much either if they go into craters. So that's the one that I own, but still looking here. And X, I mean, every time it seems to come up near 40s. We've been up here. Let's go out to the monthly charts, Joel, and look a long ways. We went up over $40 back in 2014. We gave her back. Back in 2017, we gave her back. Now we look like, we're $2 away, potentially going to challenge 40 again. 40 has just been a big resistance point for this stock. And I do remember the last time, I'm going to say it again, last time we had these pop up on these potential tariffs, didn't last. Now, obviously, the tariffs didn't go through, I believe. He backed off. So who knows what's going to happen here with this administration? There's so many headlines always coming out. I mean, you got to give it to Trump. He tries things. Sometimes people squash his ideas, though, or he backs off afterwards when everybody seems to say, what are you doing? But I don't know here. The steel tariffs, Europe. I mean, right now the steel stocks are liking it.
All-time high at X is 196, and that was made in June of 2008.
Jump over to other news here just before we get into the earnings parade. And that news is on General Motors. And if you look at GM this morning, holy cow, that's got to be one of its biggest moves in a long time, up 9% here this morning. We got an investment happening here, and it's for electric cars with GM. Spencer, what is the details?
Yeah, the SoftBank Vision Fund, the $100 billion fund in Japan, is investing $2.25 billion in GM Cruise. That values Cruise at $11.5 billion.
So how much are they investing?
2.25 out of their supposed $100 billion with a B.
I'm just trying to figure out and, do the math here because, okay, yeah. Why up 9% here today on GM? Why getting such a lift? And I'm not saying I'm fading anything because it seems like whenever you fade these ridiculous pops, they just keep going, but it's a big move here. So they get an investment from SoftBank. And I didn't read the story here, so you can, clue me in if I say anything wrong. But, my understanding to get an investment from SoftBank for electric cars is the market just realizing that GM is going to be in the electric car market. I mean, GM has been saying all along, there's been papers published that GM is going to be one of the leaders in electric cars.
Well,
I mean, why pop in $4 on this?
Who was the one that said, an analyst said that GM would be the leader in electric cars?
But do you think, does the market honestly think we're just going to watch Tesla, take over the electric car market and GM and Ford aren't going to have their own electric cars? I mean, they already have some of those electric cars. I just don't, the market is so irrational. And here's a headline. It's like, whoa, GM and the electric cars. Well, what are you thinking? Of course they're going to be in the electric cars.
It's the size of the investment and what the valuation it gives to the Cruise unit. So if they're
what are they investing specifically in? Software. Where is this $2 billion going? To say?
I couldn't tell you right now.
Yeah, it's going into the Cruise unit. And
yeah, but what specifically? Let's find out.
GM Cruise is one of the electric cars, so they put $2.25 billion in it, and then the investment. To me, it's looking like it really.
And this isn't just electric. This is autonomous too.
We should mention that it's AV.
So this is
AV
also
and
autonomous
EV.
cars too.
It's AV and EV.
Joel, me and you have been saying this on the show for a long time. There's a lot of smart people that work at GM and Ford. It's not like Tesla is going to be the only player in this game. GM and Ford are not going to sit idle. And, this is why me and you were talking about buying it. This is why I own Ford. Obviously, I should have owned GM. It would have been the better one. But me and you have been talking about buying this GM forever because eventually, and look at last summer. Remember, it was getting the buzz there too. It went up to $45, $46 because they were talking about all the electric cars they were going to have. Now we're talking autonomous cars with that, an investment from SoftBank. So I guess it's a vote of confidence more than anything. But I just think like it's a head scratcher that it's this much pop. And this is a huge company to get a 10% move. It's not like some Mickey Mouse little company. This is a company that, a stock that moves 50 cents a day is moving up $4 here right now. This is a windfall for everybody else, I think, that owns this. And I almost want to come in and fade it just because I feel like it's too much too fast. But I like the long-term story of GM too. So it's hard for me to come in here and say, valuation is very attractive at GM. It's got a nice dividend. And I think they're going to be a player in the industry as well.
41.40. I was going to give you 41.54. That was your February 27th high, is a significant level, but it's just right now it's cutting through that like butter. But I would keep an eye on 41.54. Also, that was buffeted by a 41.62 high. So if in fact I was fortunate enough to buy this anywhere here in the pre-market, definitely would be taken off a little bit at this level. Then you get into the 42 handle, nothing significant at 42 even, but a double top at 42.21 and 42.28. So great for GM shareholders, big windfall here. And, you had to be in it yesterday.
Yeah, that's that way. And it's hard to chase it here now. I mean, chasing GM up 10%, I'm maybe you're going to make money because this market goes crazy. Maybe it'll be up 15, but I feel like path of least resist. Well, I just feel like there's going to be a lot of people thinking, whoa, this is big money, big fast, but on a widely held stock. I think there's going to be some people ringing the register, which is why I'm not chasing GM in this move, although it continues to climb. When I was looking at this half an hour ago, it's just over 40. Now it's almost 42. So hard to fight the momentum.
Get out there at 42.20, Dennis, 42.20.
Jump over to a couple earnings stocks here that are really moving this morning. The dollar stores are getting annihilated here. We got Dollar General and Dollar Tree, both disappointing together. It's been a long time since both of those reported on the same morning. They're usually a day apart, but today they both report in the pre-market here. Both disappointing. Spencer Israel, what are the results?
Let's start with DG. Q1 EPS on Dollar General, $1.36. I missed the estimate by 4 cents. Sales $6.114 billion versus $6.2 billion. So a miss on that as well. Comps were up 2.1%. For the quarter, they did reaffirm their fiscal year EPS guidance, and they see sales up about 9% for the fiscal year. But I think, at least so far this morning, they're not liking the EPS and sales miss for Q1.
I mean, they're getting hit. These dollar stores always move on their earnings. They're either moving up $7 or $8 or down $7 or $8. It seems like it's never just a muted response to their reports. So they get hit here this morning. Let's start with the DG. It's down at a critical level of 90. You got the Dollar Tree. It's down. It's such a momentum market, though. And we've talked about this for years being a momentum market. I feel like the momentum is even more than ever, though, Joel, because you see how, these move stocks go up 10%, then they're up 20. Or stocks fall 10%, then they're down 20. It's like when the ball gets going in one direction, it's really hard for somebody. Like contrarian trading almost seems dead right now. It's all Momo trading. So what happens is when you get this thing getting crushed like this, there's algorithms out there that are all right along with it too. And I'm not saying blame the bots, but I'm saying everybody realizes that this is a Momo market. And the momentum now is down for these two stocks. So it's scary to come in here and say, oh, they're going to reverse, because there is not a lot of instances where that's happening lately.
No, Dick's Sporting Goods is a good example for that.
That was a gap and go too. And we talked about that too. It's every stock. Like it seems like, maybe it's not every stock, but it seems like 2 out of 3 stocks, when they're up 10%, at the end of the day, they're up 15 or 20. So the momentum is just so hard to fight. And I'm not fighting as I'm going with the momentum trading as well right now. Investing, completely different animal. But as a trader, I mean, it's hard to fight these balls when they get going in one direction. They get rolling in one direction. They just keep going.
I'll give you potential support in DG here. Your pre-market low comes in at 88.70, and that matches a pair of lows from March 13th and 14th at the 88.60 area. $1.50 off that level. So see if we back and fill. Seller at 91 right here in the pre-market. So we'll keep an eye on those two levels. And for Dollar Tree, boom, you spiked down. You just made a low at 87 even, back up in the 88 handle. And this one has the low of the move. I believe it was on his last earnings. Now it was something in March. That might have been earnings. You made a low at 86.85, and your low today is 87 even. So keeping an eye on that. The rebound in Dollar Tree so far has been capped at 90 even.
A lot of retailers reporting, but we're going to go grab Marc Chaikin right now. We'll come back to the earnings here. Bring Marc on the fly?
I'm going to call Marc on the fly. I'm doing that right now, and let's see if he answers. It's been a while.
Good morning, Vietnam.
Hey, Marc, you are. That was great. That was great that we called you live.
Are you guys too young to know that?
Oh, the nice Robin Williams shout out there. One of my favorite actors of all time. Obviously, we lost him a few years ago, but man, that was a great flick.
I should mention, Marc, we should mention that we called you live on the air instead of taking a break. So welcome to the show.
That was a great start, too.
It was a great start. We were live. Don't say anything you'll regret later. You were in Italy, right, Marc?
How did you miss the FinTech Awards? I can't believe it, Marc.
Well, we sent a team, but I've got to tell you that I must have done something to the Italian economy. I thought I was spending like a madman, but it didn't help.
That's what I'm saying.
I mean, we came in second in the audience favorite award, best in show. That's great.
But you leave Italy and things go down the drain. What did you do over there?
Well, we were spending like crazy, eating good pasta and Florentine steak. So maybe when that tap turned off, it hurt the economy, but that's a good starting point for this whole discussion. When you compare what is going on in Italy and to a lesser extent in Spain and Greece, it pales in comparison to what we had in 2011, and people have made such a big deal out of it. And the whole thing is about contagion. I mean, granted, Europe has a problem. Their economies have been soft all year relative to the U.S., but I think the market has made such a big deal about this, and that rally back yesterday, I think, is sort of proof that after the sort of post-holiday, low energy decline, that we really found buyers coming back in.
So, Marc, we've seen a significant rally in certain sectors here. It's kind of a finicky market because some sectors, like a lot of your tech stocks, have been performing very well as of late. Some of your retailers have really bounced back as of late. The banks kind of went in the doldrums, though. I know they had a little bounce yesterday there, but really, when you look, and we were talking about this yesterday, charts of Goldman Sachs breaking down to new 3-month lows just 2 days ago. Why, you think this is really, a sector picking market, because some sectors are hot, some sectors are not. What are your thoughts here as, obviously not every sector is benefiting when the market's rallying?
Well, I think the financials are clearly being hurt by a sense that interest rates are not going to go as high as people thought they were, although I think the banks are going to do really well in the second quarter earnings reports that are starting in July. The one aspect of the financial sector that I still love are the discount brokers and the investment banks. So E-Trade, Interactive Brokers, and Evercore are 3 that we've recommended over the last 5 months, and they continue to make new highs. So I think the big banks, maybe they were impacted by fear of contagion. Morgan Stanley certainly took a big hit. Goldman, I don't understand. Their trading revenues were up, but this is a case where you let the technicals be your guide. I mean, there's no way you want to fight the tape on Goldman. There's just no way. And money is coming out of it. Chaikin money flow has been very negative.
What about the other stocks like the Netflix and the Googles and, well, Google maybe not so much, but because it's kind of lagged, but the Netflix, I mean, Microsoft is right near its all-time high there. Actually, I think it made one yesterday. I mean, you can look at Square, it's back here again. What's the Chaikin money flow saying about these stocks as they've had good runs already? Is it still positive?
Very strong on Netflix. I find it hard to believe that it's got a bigger market cap than Comcast or Disney, but so be it. Money flow on Facebook is just rip-roaring positive. Power Gauge is bullish there, outperforming the market. So these stocks contribute to a underlying strength in the large caps, which have been underperforming, by the way. Small caps are where the action's been. The IWM Russell 2000 ETF made a new all-time high last week, did it again yesterday. So what I'm looking for is a breakout in the large caps prior to the beginning of earnings season around the 10th of July. I think this period now between June 1 and the start of second quarter earnings seasons is sort of a vacuum period where the market can really do what it wants. And once we get over all these cross currents between Korea and the China tariff war and what's going on in Italy, I think earnings are going to be on everybody's mind.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins the show every couple of weeks to discuss his indicators. Marc, I just want to get a quick take here just on the overall market. We've rebounded well off those February lows. We're hitting a lot of resistance here in the 2730, 2740 area basis, the S&P. You think, we got the jobs number tomorrow. I mean, what's going to separate this from being the top of the trading range to breaking out and going up and perhaps testing all-time highs?
Well, you've identified the right resistance area. We've got to close above 2750 to break out. The good news is we broke that short-term downtrend about 2.5 weeks ago when we closed above 2680. And I think you got to look at the small caps. So there's an interesting phenomena that some people are not really tuned into. When small caps outperform the way they have over the last 3 weeks, it's bullish for the small caps in general, but it's even more bullish for large caps. So with more than 50% of the stocks in the S&P 500 above their 50-day average, it's not just the FANG stocks like Facebook and Netflix that are carrying the market. Under the surface, you've got the smaller cap names in the S&P doing well also. So I think we're going to break out. It's just a question of when, and we still have a long-standing target of 2850 to 3000 for 2018.
Provide some background here on this dip in crude oil. Got up near $73, big decline to 65.80. Trying to get off the mat here. A big momentum market. Is this decline been enough to change the Chaikin Analytics indicator negative?
No, especially in the refining stocks, which we have loved now for 3 or 4 months. I think we talked about them even longer last time. Marathon Petroleum, Valero, Phillips 66. What happened last week, we had 4 straight down days in crude oil, culminating in that $3 drop on Friday pre-holiday. Is people paying attention to rumors and headlines. You just can't make money in the market if you do that. So there were rumors that they were going to lift the cap on production spurred by Russia, which needs it desperately, and Saudi Arabia, which may not need it. And then yesterday they said, well, that may not happen. Those create buying opportunities. So the dip in Marathon, phenomenal buying opportunity. This is MPC. MRO is also bullish in the Chaikin Power Gauge. But MPC, Valero, Phillips 66, they benefit from lower crude, and they've also made money with higher crude. The key to Marathon, though, is their buying end of the year, used to be called Tesoro. It's going to create a monolith refiner and retailer with a huge pipeline into Mexico. And what most people don't realize is that Mexico has a very aging refining infrastructure, and they need imports desperately. And Marathon, once they combine with end of year, are going to provide dual pipeline flow into Mexico. This is just a great company. Anytime you get a chance to buy it on a dip, it was down from about 80 to 74. You just have to step in there. This is a long-term holding, not a trade. And I personally think that energy has a support level at 66 that it tested on crude oil. As long as it holds the 66 level, I think we're in good shape.
Marc, what about retail? Are there, we're kind of at the end of earnings season. We've got a couple of retailers still to report, reporting today and tomorrow. Are there specific retailers that you like or don't like?
Love Macy's.
Why?
Like Michael Kors, Macy's has turned it around. Their online business is thriving. The in-store connection to online inventory has really started to gel. And, it's a company that was basically written off as Amazon roadkill, and I think they're doing very well. But Retail is definitely a mixed bag. The reaction to Michael Kors' report yesterday, which was basically positive, I can't find anything negative. When you look at guidance, earnings, revenue, they beat and they raised, and yet the stock was down 14%. So it's clearly a mixed bag. Today, you had Dick's Sporting Goods reporting. Even without firearms, the stock is up huge in the pre-market. So retail is really a mixed bag. Dollar Tree reported not looking great. You've got to pick your spots in retail. It's not some group where you can just buy them flat out or even buy the ETF. You got to find the right names.
Marc, I got to ask you about GM today. The legacy stock, government motors, whatever you want. Gets over $40 early in the year, comes crashing down, and then gets an investment from SoftBank, trading up $3.50. We just did hit some resistance here in the pre-market trading, but how, if you're not in it in a stock like this, but you want to be in it, like you wanted to be in it yesterday, like how would you approach this? I mean, it doesn't seem at this point you're ever going to get a gap fill again. Give us your short and long-term outlook here for General Motors.
I don't have a strong positive feeling about GM or the whole auto industry. We've had a sort of negative outlook on everything from Goodyear to some of the parts companies to the major automakers. The investment, as you know, was really in the self-driving car area. This speaks more to the problems that we've discussed ad infinitum here about Tesla. You've got so many different competitors. This really isn't about General Motors. It's about their self-driving car business. So I think this may be a selling opportunity, not a buying opportunity in GM.
And let's just talk about, some of the value stocks, which have been ignored as of late in favor of the momentum stocks. Some of your higher paying dividend stocks, your Kraft Heinz, and I guess General Electric would fall into that category. I mean, this has been a long-term trend of folks looking for growth over value. Do you expect that to continue?
Well, let's look at GE first. GE, the power gauge turned bullish for the first time in 2.5 years in mid-April, and it's remained bullish. Chaikin money flow is still negative, so you've got a lot of naysayers from some of the big brokerage firms, but I think this is a buy on weakness. In terms of the consumer staples, I think there's still tainted merchandise. The mantra now is that, brands don't count. So Procter & Gamble, Colgate, the packaged goods, Heinz, General Mills, I wouldn't go near these stocks. The dividends are attractive, but not if you're going to lose 10 or 15% in the underlying stock. So, this is the sort of Amazon effect in packaged goods. People are buying generic brands. So the classic example, and it's part of the reason that Procter & Gamble has been so weak, is Harry's in the razor space. They're just eating Gillette's lunch. And I haven't tried the Harry's razor yet. I'm going to finally, because they keep following me around the internet like a ghost. Because I clicked on their website once. But, the idea that you can get a quality disposable blade delivered to your house on a periodic plan, so you don't have to go to CVS and look for the sale opportunity or Costco, that's pretty appealing. And they just eaten Procter & Gamble's lunch because they own Gillette. So that's just one specific example, but I don't think people care about Tide versus Does versus all. They're going to buy generic brands. Costco has proven that for 20 years, but Amazon has made that even more endemic. So I think the packaged goods stocks will find a bottom at some point, but when I look at a Chaikin chart on Procter & Gamble, read it from the bottom up, power gauge is red, relative strength is red, money flow is red. This is like a sea of red. I don't want to go near these stocks.
All right, let's actually talk about Costco. They report earnings today after the bell. We're looking for our EPS of $1.67, revenue of $31.5 billion. Give us your thoughts on Costco.
Well, the stock's been performing really well. The power gauge is neutral. The reason the power gauge is neutral is that the financial metrics are stretched, and the earnings picture has been choppy for Costco. But I think it's a good company it's more or less at the top of the page here. I can't imagine that they're going to come out with earnings that are going to really change the picture. If you look back at the last 4 earnings reports, even when they had a positive earnings surprise and you got a little bit of an up gap the next day, it was a selling opportunity. So this is a great company, but I think you got to find a way to buy it on the cheap, closer to 180, 185 than up here at 200. And even if they have a strong report, in this current environment where there's such a sell on the news mentality, an earnings beat is not going to be enough. People have to see a big trend, some change. Maybe it's, gasoline, where, they are a big retailer of gasoline. I don't know, but you're working up against a triple top here at the 200 level. And I find it hard to get excited about this ahead of earnings. Now, if it sells off after earnings, maybe I'm interested in the stock.
I want to also ask about a couple, watch stocks or jeweler stocks. Movado and Fossil both have been on fire. I guess we'll start with Movado because I think they just had earnings yesterday, if I remember correctly. So thoughts on, or I guess, what is the power gauge saying on Movado and Fossil Group?
Fossil, the power gauge is extremely bullish, but outperforming the market since mid-February, spiked up to a new high. And, the last earnings report in February prior to this one, the stock spiked up, but then it pulled back from about 18 all the way to under 12. This earnings report, it spiked up and just kept going. Hard stock to buy up here around 21.5. Movado, also bullish, but it's been bullish a lot longer, and the uptrend has been steadier. The power gauge has been bullish since mid-June. Now, just to refresh the listeners, power gauges are multi-factor quantitative model that's 85% fundamental. So it's your way of gauging the fundamentals without having to do the heavy lifting. Stock's been outperforming the market since late August, and it's been in a real steady uptrend. History of positive earnings surprises. You had another one yesterday. They just blew out. Problem is, every spike up after an earnings surprise going back a year has seen the stock consolidate. So you definitely don't want to buy it here. If you look back to August last year, November, March, and now late May, you had to wait for a 5 to 10 day either sideways or some sort of a pullback in order to be able to enter the stock comfortably. So you may end up buying this under 45. I don't know if it fills the gap or not, but these stocks are just killing it. And you've definitely zeroed in on an area of the market that's doing well. Just a question of how you get into these stocks. You cannot pay up for them. Otherwise, you're going to experience a lot of pain and then just sell them at the first sign of distress, and that's not good.
All right, last one, Mark, and we'll let you go. Question from our chat here. BZ Tokyo is remembering, I think the last time you were on, you said that the SPY went negative on the power gauge. Is that correct, and has that changed?
That was money flow that went negative, okay. And it did change. About the time that I left for Italy, I think it was around the 1st of May, Chaikin money flow turned positive on the rally from 2,600 up to 2740, and it stayed positive. You're now getting oversold on a short-term basis based on the sideways to down action that culminated on Monday. And so anytime you get a short-term oversold in the SPY with Chaikin money flow as positive it is right now, that's a bullish sign. So that's part of the reason that I'm short-term bullish and expecting that we may break out to the upside between now and the start of earnings season in July.
All right. Marc Chaikin has been on with us from Chaikin Analytics. He joins us every other week or so when he's not vacationing in Italy. Marc, thanks so much for the time this morning, and have a good one.
Say hi to Pete.
You're welcome. Always great to be with you guys.
Say hi to Pete for me.
I will.
I had a good time
you
chatting
bet.
with him.
Be good, guys.
Thanks, Marc.
Dennis, you're back.
Yeah, Dennis.
Yeah, why did you know I was gone?
No. We didn't say that you left, but Dennis did.
I had to leave for just 3 minutes. I had somebody at the. I've got all kinds of construction going on here right now. I had a leak fixed, and then I've got concrete raising going on at my house today. So the guys were asking a question, so I had to run outside quick. So I got to apologize to Mark if he knew. I don't even know if anybody knew I was gone, though. Tell you guys just told everybody.
We didn't tell anyone.
I was with for most of the interview with Mark, but I had to take off for 3 minutes. So I'm back.
Okay.
So good.
Right.
I want to talk, before we go back to the earnings stocks, I want to talk about these 3 little Chinese stocks that have been powerhousing through. Scott and my Twitter wanted us to cover them too. We've talked about them before. We're going to talk about them again. Spinner's been talking about it in the chat like crazy. We've talked about them multiple times on the show. It's a play on streaming. So you got the IQ, which is kind of like the Netflix of China. You've got the BILI, which does streaming, and then HUYA, which does streaming as well. You know, a lot of the sports is going on there over in China too. So it's a little bit of a play on esports to a certain extent as well. But they're streamers, and these 3 stocks have just been absolute monsters in the last, I don't know, month or so. I bought the IQ back around 18. We've talked about these on the show a few times. I also bought the BILI, which I think I talked about on the show as well, back around 13, just 4 or 5 days ago. And, you know, now we look at the BILI above 17. We look at the IQ above 26. We look at the HUYA, which I have not traded that one, but I know Spinner's been in it. He's been all over these in the chat. It's over 26 now too. I mean, these stocks are up 25, 30% in like a week and a half, 2 weeks. So, you know, there's lots of questions coming around these, and everybody's like, when do you book the profits? And it's always tricky, you know, so you got this, you know, Spinner saying he booked a little bit. I just look at it, and, you know, Spinner made a good quote in the chat yesterday, you know, sell when you can, not when you have to. And I look at so much money so fast. I actually took a little piece of the IQ off yesterday, just 1/3 of my position, because I don't know if I totally believe in the story, but it's a Momo play. These things are hot as hell right now. They're going straight up. It just seems like almost now a little bit too much too fast. They seem overextended. That's why I'm starting to book, at least on the IQ. The BILI, I'm looking at all these and potentially going to book some profits here on the 2 that I own, obviously. But Joel, what are your thoughts here? I mean, when stocks go parabolic like this, it always feels good in your portfolio, but how do you lock in those gains?
Well, first of all, you wait for at least some kind of consolidation. Like right now, it's just in rocket ship mode. So eventually there's going to be a point where you find some sellers, right? You maybe put a double top or a triple top in, and then, buyers will still be, consistent, and you'll get a little bit of a trading range. Then when you get a trading range, you can use the bottom of that trading range, perhaps to, protect some profits. But if the volume is just pouring in, I would also keep an eye on the high close of the move for each of these. For IQ yesterday, it was 25.71, trading up 54 cents. So, and if it starts to get a couple closes in the same area, or, puts in a potential double top, then that's some areas you can lean on. But Dennis, I think the chat is helping you more than you're helping the chat.
Well, they help me here. Like, we try to obviously give you, a radio show. So we try to give you stock tips every day. We try to, spread, but our chat's great. I mean, you got to join it there if you're not already in it. Some great traders in there with some great ideas. The IQ actually came from Scott for me from my Twitter account. So, he was tweeting at me with the idea. He's like, this is the Netflix of China, was telling me, on a comparable value metrics, you look at it. And it's always difficult. The one thing difficult is when you try to crunch numbers on these Chinese stocks, especially the startups, there's not that much there to crunch. So, you're looking at stocks that, especially in the case of BILI, you've only been public here for a month and a half. So it's difficult to find information on Chinese stocks sometimes, period, as opposed to, just trying to find, look through long history of earnings, because it's not there. This thing is just pure on momentum. It's pure on, streaming is so hot right now, anything streaming. Obviously, we saw Netflix taking off over here, and people are saying that IQ is the Netflix of China. Whether that's true or not, I don't know. All I know is it's hot right now, and what's hot is hot, and that's what we've been saying about the market. Seems like what is hot stays hot for quite much further than you can expect even. I mean, here was a stock that was $16 3 weeks ago. Now it's 26. So you're talking about stock, if you actually were lucky enough to pick it up at the lows. I didn't quite pick it up at the lows. I picked up at 18. But, I mean, if you were lucky enough to pick it up at the lows, you're talking about stocks up like 70% in 3 weeks. What do you say about gift horses, Joel? What's your saying? He's the horse guy.
You totally look a gift horse in the mouth, right?
Yeah, so that's why I booked a little bit yesterday. I think I might book a little bit more here today on these things, because they're big moves. But it can continue.
You know what? Also, you got to be, cognizant of too. You never know when, these are going to get citron too. You know what I mean?
Oh, there's a great point there, Joel. And we know if Andrew Leff comes out with a tweet and says this IQ is just ridiculously overdone, the thing will fall 20% on that tweet. So that is a great point. And Citron was always, we call him the bubble buster. And he really is, when he comes in and says something, then obviously usually it tanks immediately. It usually tanks prior to his tweet for some reason, is either people got the memo that he's going to tweet that out. But regardless, you can't, fight Andrew Leff. When he says negative about your stock, it's almost always a good idea to get the hell out.
And
that has not been said here yet. But he likes to look at stocks going straight up, and he likes to stop them from going up. And he is the bubble buster. So these things will, and it's very difficult to get out the top of these things because it'll be 26.25 like it is this morning. And it'll rally up to like 28 pre-market, and then boom, in 20 minutes it'll get back like 10%. But that's the way these things trade. They're wild. It's kind of opposite to my style of trading. It's out of the norm for me to be in stocks like this because I trade more boring stocks, more predictable stocks, more stocks that are correlated with the S&P 500. So these, when I bought these originally, these were speculative little plays. That the chat was basically helping me out with as well. And I was like, I always play, some smaller stocks and some spec plays. That's what these were. So on the spec plays, you got to make more money too. Like you can't go into a speculative play looking to make 10% because you're probably going to lose 50% on some of these spec plays. So I always like, on the speculative plays to be making 30, 40, 50%. And then it seems to, work itself out in the long run. But if you're coming to speculative plays trying to make 5%, I think you're in a dangerous game.
Ed Seeking Missile is bringing up one of Harlan Pine's quotes. You got to sell your peanuts when the circus is in town. And
circus is in town right now. That's a for
three-ring circus with those three stocks.
I'm probably going to lighten up some more here today because it's a good quote there, Edge.
All right. We had some retailers report yesterday that are not quite getting the bang for the buck that you did. You had Guess. I know you got a lot of Guess jeans, Dennis, and PVH.
I don't think I want.
Let's go with Guess first.
All right. Guess reported, as you mentioned yesterday after the bell, Q1 adjusted EPS 23-cent loss, which is in line with the estimate sales of $521 million versus a $508 million estimate. So he beat on the sales number. Q2 EPS guidance coming in mostly light, maybe a little more, mostly in line, maybe a little bit light. 27 to 30 cents is what they said. 30 cents was the estimate. Sales up 14 to 15% in Q2. That is their sales guidance. Fiscal year EPS guidance in line. Fiscal year sales guidance up around 9% for the year is what they're seeing.
You've had a lot of retailers blowing it away. This is not blow it away, and that is somewhat disappointing here. Guess has run up. I mean, you can say, it didn't into the report, but it did in the last month and a half.
Yep.
It was a $15 stock back at the end of March, and now we're talking about a $25 stock. I think the easy money has been made on the long side of Guess, and I muted response to the earnings here, but the only thing I would be concerned about is if it takes out yesterday's low, which is 23.79, that would be an ugly candle. So if I'm long this right now, I'm stopping out. Maybe give yourself a little more wiggle room. You could probably go down to the low of 23.52 back on May 23rd. Below 23.50, I don't want any part of this stuff.
It's so funny. I was looking at this and I was like, well, first I was going to say 24. Because if you drew a line on, just looking at the chart, and I saw yesterday's low at 23.79, and then boom,
you did the same thing.
Then I saw the other pair of lows at 363 at 352. So that's, if you're a swing trader, you got a lot of profits on this. You gotta give it some room to breathe. On the upside, you only had one day in the last 5 days where you printed over 25, and that was 25.19. But the high close of the move was up in the upper 25 handle at 25.85. So if you get a big rally, look for the $26 area. And PVH Corp, Philip Van Heusen, reported well, and that's not having a lot of action this morning.
PVH Q1 adjusted EPS $2.36. That beat the $2.25 estimate. Sales $2.315 versus $2.28 billion. So beats on the EPS and the sales for PVH in the Q1. They're also raising their fiscal year EPS outlook. Their Q2 EPS outlook is higher. Their Q2 sales guidance or sales growth for the quarter 10%, and again raising the EPS outlook for the fiscal year only by 5 cents though, so nothing crazy.
It's a decent quarter, but this stock just doesn't fit the description of so many other retailers that were in the doghouse. PVH was not in the doghouse coming into this quarter. You can look, and PVH is only like $3 or $4 off its all-time high. As of, I guess it's $10 off the all-time high now if you go up to the 163 area. But I mean, it needed, some of these other retailers get the pass because they're just, the stocks are just so depressed in price. This is not the case. So this stock absolutely needed to blow it away. It's a good quarter, but not a blowaway quarter. And that's why we're not seeing the response that some of the other retailers have had.
All right. Just looking at PVH here, had a nice run after the last earnings report. You had the gap in the go. You came down, you tested that low, and now just kind of hanging out in the middle of nowheresville here. I keep an eye on the pair of highs. Well, not really. 157.40. We're $2 away from that. That was Tuesday's high. That'd be resistance coming back on the downside. Several lows right at 154. So if this loses 154 even, could there be see a quick buck drop into the lower or to the 153 area? So those are the parameters that I set for that issue. And Dennis, we got to talk about the disaster stock of the day here. And our traders just like to get down and dirty in these kind of stocks. CRISPR Therapeutics, they either had a bad trial or something. FDA delayed a trial, but is still on in the OU. Spencer, do you have any additional information on CRSP?
So you just mentioned a clinical hold on a trial pending a resolution of certain questions they had as part of the review. The trial or the drug is IND for the drug CTX001 for sickle cell disease treatment. So it's not a death blow, but it's certainly not good.
So stock trading down 15%, but putting it in perspective, this stock at the beginning of 2018 was $20. So you're now 73. I mean, it's not surprising that if you get a delay, there's going to be some nervous Nellies out there because there's everybody sitting on some big profits in this sucker. So this has been one of the best stocks of the year. Even after today, it's still one of the best stocks of the year. So hard to just say, oh, this is a disaster when you look at where it was just 3 or 4 months ago. It's been straight up into this, and now we get delay. So taking some money off the table, but believe it or not, the trend on this is still up. So these things are wild. It's, beyond my pay grade to try to call where this is going to go here in the next 5 minutes, because we already said, down and it gets down, it seems to continue to go down. But this stock had a lot of positive momentum going in before this, just this news overnight.
I mean, there's a lot of people here, even with this $11 drop, that are sitting on some nice profits from earlier in the month, right? So
yes.
Boom, boom. You traded in this month, you traded in the 46 handle, 46.51. So if you think you're coming in here and you're buying and you're getting this into cheap, there are other people here that are thinking, wow, I wish I would have sold this at 73.59 yesterday, the closing price. But you know what? I'm going to take some off here anyways. I'm not going to wait for this gap fill. I'm not going to wait to see what happens with this trial. I will note the pre-market low of 55 even. We did bounce $8 above that. You are forming some resistance at $64 area. So I don't know. Doesn't look like we're getting back to 58. Doesn't look like we're filling that gap anytime soon.
Let's take a look at imbalances here. We didn't get a chance to update you at 8:30. We will update you on that now. General Motors, not surprising, 101,000 shares to buy. Obviously, that's going to be up significantly here today on the SoftBank investment. GE, 132,000 to sell. GE is back in the doghouse. It did bounce off 14, and I will say there was a level there, Joel, and we got there before, and it's not coincidental that these things bounce at 1401, 1402. That is psychological. It's usually a fact that there's a big institution sitting at the point. And what I mean is there's a big buyer at 14, so everybody's leaning on it. There's 562,000 shares to buy at 14 in the book right now that is visible. So, you can imagine there might even be 1 million shares there to buy at 14. So it takes $14 million worth of selling pressure at one time to knock it down through 14. That is sometimes difficult to do. That is why we have the bottom there. So if you want to play the bull case in GE, it's got to hold 14. Below 14, then you start to open up, and then it starts to open up probably to 1375. Seems like the quarters. And then 1350, there's another 550,000 shares down there. But There is some support at 14, but this chart is not pretty.
Yeah, it was getting the beats the other day, and I think Kramer came out and said something positive about it, and that gave it a lot of lift. 14, 17, 18. Those actually have been 3 of your last 5 closes here. So good to go. See if you could uphold 14.
You said GE was 32,000 or 132,000?
132.
132. Okay. Were there any other notable balances?
Citigroup 92,000 to buy. We know the banks held on to their gains there yesterday with TLT being weak. Always look at the TLT. TLT is down slightly here today. SPY is up. That means banks are probably going to be higher. Your Deutsche Bank indicator is not good here though, guys, and we've got to go to it. The stock is now breaking down. I don't know if there's news here again, Spencer. We are breaking down below 11 bucks here right now on DB. This is concerning. We said it yesterday that I'm concerned about the banks because of Deutsche Bank as well. Is there a headline here? Because DB is getting ugly.
Yeah, there's a headline. Deutsche Bank's U.S. operations have been designated as in troubled condition by the Fed.
Oof. Okay. So now you're under 11 bucks here on DB. It's trying to bounce here, but this chart is absolutely ugly. There's problems here with Deutsche Bank. And you can say, oh, Deutsche Bank is just a Deutsche Bank problem. But we know from the financial crisis that when you have a big bank like Deutsche Bank getting into trouble, they're all in bed with each other. It is not just a Deutsche Bank problem. It will be other problems for other banks in Europe. And not only that, that then leads us to our banks as well. So, despite what a lot of people are saying that, maybe, they're concerned about interest rates, I believe our banks are getting depressed because we are concerned with Deutsche Bank. And if Deutsche Bank goes down into single digits here, which it hasn't been in like 25 years, I think you're going to start to see the banks roll over big time again. So I am still going to say it. Yesterday I said I'm a seller of the pop in the banks. I own no banks in my investment portfolio here right now. And the main reason for that, valuations are fine, but I think there is some underlying issues here that we don't quite know about. I'm not saying it's going to be a European financial crisis, but I'm saying if we get into single digits, there's got that fear could start, and that is enough to knock some of these banks down significantly here. So be careful if you're playing banks from the long side, because that Deutsche Bank is scary right now, guys.
Trader 33 is asking about a sympathy move in Ford here. And this is really company-specific news of that SoftBank investment. Ford, the chart is looking okay. I don't know if it's going to get any, the same kind of lift that GM is getting, and it hasn't as of yet. 1165. There must be some size there. Your last 4 highs, 1161 to 1165. It is trading above there right now.
GM sympathy.
Yeah, it is sympathy. I think if it holds 1155, the close off the hop could clear though that seller out 1165. Yeah, but this is a pretty specific news to General Motors, and
it is.
Yep.
And I'm going to go along with you, Joel. There is size at 1165, 178,000 shares. It's not that much. I mean, Ford can trade that and take that out. So it's not saying it can't do that. But like I've been saying, that book is just thick. So when you look at the Ford book, you think, oh, really, what is my upside here? It gets thick at 1175, 1180, 1195. It's going to take a lot, of money to push it up through there. And that can happen. And full disclosure, I'm still long forward to my invest portfolio. I love the 5% dividend that I get. I still believe they're going to be a player in autonomous cars as well. It's not just going to be GM. It's not just going to be Tesla. But that being said here, there is, a tough road to climb here or a tough road to hoe, however you want to say it. 1165, 1170, 1175, all thick. So as you start to get in this area, it gets very thick, which means it takes a lot of money to push it up through this area.
4.5 million shares have traded in GM, up 422 at 42.05.
Edible move.
Yeah, I did mention, I think I saw something on the weeklies, or maybe going back to the dailies here, a pair of highs at 42.21 and 42.28. Dennis, how about a little side bet here?
Give it to me.
I think GM will hit its high in the pre-market trading for the day.
You think it's already hit its high?
No, I don't think it's hit its high. But like whatever the high is in the pre-market trading will stand. It won't see that level during the regular session.
No, why would I bet that? That just, often you see that. I would gather probably in, these cases that the majority of the time you probably see the highs in the pre-market after hours when you have news. So no, I'm not taking on that bet. That seems like a silly bet to me. The GM, you're trying to get me to buy basically GM up 10% here right now. Not doing it. I'm out. See how he's sneaky like that. He tries to sneak it in on me. Sneaky. Out Conan guy.
All right,
so
I'll
sneaky.
take it. I'll take the other side then.
No, we're not making no bet here on this.
No
I have no idea of where that's. It's up 10%, which I always think is ridiculous. So
we
I'm not
thought it
making
was
a bullshit on.
ridiculous at 8% and 9%, but
This Deutsche Bank story is still just interesting. I just see it down here at $11, and I can't stop looking at these banks that are trading higher here today, and I think those banks are going to roll over. I'm almost tempted to start shorting banks left, right, and center here. But, I guess it depends on if the Deutsche Bank rallies back or not. But I think it's going to scare some of these people. So I'm scared of the bank rally here today. I'll say that. Banks are up in the pre-market. The U.S. banks a little bit here, but I'm a little bit nervous.
Spinner made a good point, and we did get a chance to ask Marc. He's like, can this market really go back to new all-time highs with the banks in the gutter like this? And that's a very good point. But who knows? Is the biotech's going to pick up the slack or whatever? But that's true. With the financials, a big component of the S&P 500, with your JP Morgan, your Berkshire Hathaway, and your Bank America being big components in it. It's an interesting note. Real quickly here in the YouTube chat, UGAS, which is the long natural gas trading vehicle. Big 2-day decline, now getting a lot of it back up. I'll just look at this technically here, and I'm not even going to look at the natural gas chart. But there's a gap to fill at 66.42 from 3 days ago. So from a technical perspective, if it gets anywhere near that gap after the big decline, I expect to see sellers there. And then also DC wants our thoughts on NEE. Is that a utility? Yeah. Next Era Energy. Wow. That's a
huge one.
Wow. Look at that.
I trade that all the time.
Look at that chart.
Yeah, it's been unbelievable performer compared to what some of the other stocks have done in the sector, obviously. Wow. So a little bit different style of company there. So they've got some other stuff going on. But again, you look at where the utility stocks are, and you look at this one's really done well comparatively. But you know what? The utility stocks have come back from the lows. So, you look at Duke Energy was down at 73 a week and a half ago. It's been straight up for 4 or 5 days. So obviously, the utility stocks think that interest rates are not going that much higher anytime soon either. If we start going into, financial problems there with Deutsche Bank, those interest rates will stop going up.
Right, Dan.
More bad news for the banks.
Yeah.
Everybody's bullish banks everywhere. You know what? I'm not. I'm bearish banks. I'll say it right now. I'm bearish the banks.
Not a lot in ratings land, but there is an interesting one here. Knocking down Micron Technology, $1.82 here, nearly 2 million shares. Downgrade from Morgan Stanley, Spencer. Was that it from overweight to equal weight or something like that?
Yep, downgrade exactly from overweight to equal weight.
I don't know, Dennis. You're the Micron expert here. What do you think?
Not really, because I never bought it up here. It's pulling back here. You got a downgrade. Still a lot of people that want to own this stock. I'm still sticking with it. So I'm not selling my Micron position. The thing is dirt cheap, especially if you think DRAM prices are still going up. Because in that note, I just kind of just looked it over. They were still saying DRAM prices I think could go higher. So this is more just a valuation that the thing's run a long ways here. It's still a price target of $65 on it. It wasn't that bearish.
Okay. All right. So maybe a fine.
Just go back to the IQBILI, HUYA, and Spinner saying sell your peanuts, raise your stops. You know what? I agree here. I think these things top out today. So I think you're going to see these things maybe go, for the little parabolic move here off the open. They're up again. I think you could see them get silly and go like IQ could maybe hit 27 or even higher here today. And I think it peels back. And by the end of the day, I think it's red. I'm making the call here right now that I think these things really had a big move here. I think they get a good move in the first 20 minutes of trading, and I think it's the momentum that eventually it's like upside capitulation. Not saying these things are done long term here, but it's a big move here. I feel like upside capitulation's coming today for some reason. So my call is that these things run early, then they sell off hard, and by the end of the day, they close in the red. I'm making the call.
All right, I like that. All right, Spencer. 9 o'clock, right on the kisser. Do you want to wrap things up and preview Friday's show?
On the show tomorrow, we are going to be joined by a pair of guests, Ryan Craver, one of our go-to retail experts, and Tracy Reiniak will join the show. She's with Zacks, so they will both be on the show tomorrow. But if you want to catch any part of today's show again, any part of our chat, our talk with Marc, or to talk about GE or GM or whatever, you can catch our podcast on iTunes, SoundCloud, Stitcher, and YouTube. Just search for Benzinga or Pre-Market Prep on any of those platforms. Thanks to all you who joined us in our chats today. Just a reminder that the chats are they don't end after the show ends. The pre-market chat at premarket.benzinga.com is running all day and even into the night sometimes. So you can go there throughout the day and hang out with some people and talk about your trades there. But that's going to be it for us today. So I hope you join us on tomorrow's show, and I hope you all have a good rest of your Thursday.